All right, journal entry number 20, I don't know, 27. New York session, New York Open, on August the 7th, one win, one loss, well, one loss and one win. Both longs, one on the S&P 500, which was the loss, and one on the Nasdaq, which was the win. So break evenish day with my loss on the Japanese yen yesterday night. Remember that the trading day starts at Sydney, ends at New York. So on my P&L, my loss yesterday is part of today's trading session. So I ended up losing like $200. Nothing that bad, right? But let's get to the grain and gritty of this. Now, I was looking at the open right here. This is the open, 9:30 p.m. a.m. And I was looking for nice divergences, bullish divergences between these two markets, the S&P 500 liquidating this pre-market low, and right here, the Nasdaq did not liquidate this pre-market low. So I did like the I did like the longs here. Now, was my entry good? I don't know. Oof, I have to go through this because I think that that my entry was terrible. Um, let's go through that. Now, on the 15-second chart, if you go to the 15-second chart, I think I got it on the 15-second chart, if I'm not mistaken. So here, yeah, on the 15-second chart, I got in at the close of this candle, which was the liquidation of the lows. Now, I think that is a mistake. I think that is a mistake. My execution was terrible. Now, why was my execution terrible? So, yeah, I mean, we liquidated the lows and we created this big boner candle. But again, I think that the structure in the market was still bearish. Now, why my execution? I mean, the setup is C. The setup is C. Execution-wise is C. Everything is terrible about this trade. Now that I'm looking at it, everything is terrible about this trade. So why? Um, let's put on an array here. So first of all, I'm gonna look at higher low, and higher low here. Wow, yeah, this is terrible. This is terrible. So if I put on array here, on array on the higher low, we never closed about this higher low. So this is a terrible mistake. Oh boy. This is the worst trade I have ever taken since I started this video journaling on July 11th. Just look at this. Now, this in fact can be accumulation, manipulation, and distribution. I mean, only and only if price would have closed. Hold on, my mouse is lagging. Only if price would have closed above this high, which it never did. It never did. So I was too eager to pull the trigger here on a bullish move, but we were still inside of a bearish trend or of a bearish structure. So I mean, the setup, there is no setup. So C, execution was C, trade management, there was no trade management. I got stopped out. So everything is horrible about this trade, but horrible, horrible. Now, the second one, this was perfect actually. Long on the Nasdaq, long on the Nasdaq. So right here, this is right here below at the bottom of my screen. So low on the Nasdaq. Now, I mean, I'm not paying attention to everything that happened afterwards. I'm looking at something that I need to improve on. So the setup was perfect in the sense that there was this massive, massive divergence with this 5 a.m. low. that the S&P 500 took out and the Nasdaq did not. This is the 50-minute chart, so this divergence is super important, actually. So there was this big, massive divergence. And execution-wise, on the low time frames, there was no divergence, right? No divergence on the low time frames. But that doesn't matter. So this 15-minute divergence was massive. Then we did liquidated that pre-market low, finally on the Nasdaq, liquidating the opening range low and creating a V-shaped recovery. So setup-wise, everything with those. I mean, when it comes to this V-shaped recovery on such a 15-minute, on such a strong divergence on the 15-minute chart, I'm not looking at the 1-minute structure, but I mean, I am looking at the 15-second structure right here, right here. Hold on. I'm going to delete this. Oh boy, oh boy, oh boy, oh boy. Why are you taking so long? Oh boy, oh boy, oh boy. Why are you taking so long? All right, hold on. There we go. So 15-second structure. When it comes to the Nasdaq longs, I'm looking at the 15-second structure. Why? Because this is the opening. The opening range has just settled. The opening range has just settled. We were trading this at 9:47 a.m. So 2 minutes after the opening range was settled, there's a ton of volume and volatility in the market. Excellent, excellent, excellent. If you ask me, excellent entry, the setup, price failure below a 15-minute high low, now below the opening range low. So this massive V-shaped recovery above it, excellent, perfect setup. Execution-wise, A plus, because I waited for this 15-second range, structure to break. So everything was nice. Now, trade management, I'm gonna give myself a C on trade management. Why? I took 5 contracts, so my risk was quite high. But I mean, this is my absolutely normal risk. I have been trading with very low risk up until these few days. Now, structure broke here, and I took 4 contracts on this spike high. This was emotional because of the high risk, and I moved my stop losses to break even too fast, just to see my targets get hit at the opening range highs. Now, so what setup-wise, perfect execution, perfect setup, and trade management, I fucked up. I mean, I made money, but what I didn't like, this taking partials here is okay, I guess. This is okay. But moving my stop losses to where there's no structure low and moving my stop losses to break even just because I didn't want to give money back to the market, that's a big flag. And where should I have put my stop losses? If I wanted to be aggressive on my stop loss positioning, I should have used this structure. But basically, my stop losses were here. And after taking profits, if I were to move my stop losses, this is the level that I should have moved them. This is the next structured low. I guess we can say this is a structured low, but I just don't like it. So yeah, 2 trades, 1 win, 1 loss, small red day, which it is what it is.